Solo 401ks, though they've been around since the early 2000s, are becoming increasingly popular. And here to talk with me about this is Jean-Luc Bourdon from Lucent Wealth Planning. Jean-Luc, welcome.
Thanks, Bob. Thanks for inviting me.
Oh, it's a pleasure. So these 401k plans that are designed for individuals are becoming increasingly popular. Tell us more about that.
Yes, there was a big change in the Secure Act 2.0 that made the solo 401ks available to set up in the current year, but to make the contribution for the prior year, so long as it's done by the tax filing deadline. So a lot of times we would find self-employment individuals set up a SEP, and we would ask them, why do you have a SEP? They would say, well, it's because at tax time, when I wanted to solve a tax problem, that was the one plan that I could still set up and fund for the prior year. Well, no longer the case. The solo 401k, which very often is a better option than a SEP, is now available for that, what I would call reactive tax planning. Another reason why the solo 401k is increasingly popular is that for individuals who don't qualify to make a direct contribution to a Roth IRA, if they qualify to set up a solo 401k, they can roll over any IRAs they have into the solo 401k. Then with an empty IRA, it's much easier for them to use the backdoor IRA conversion strategy, and so that opens up an area of planning that they would not necessarily have with an IRA that is well funded.
Yeah. So before I ask the next question, maybe for the benefit of our viewers who don't know what a backdoor conversion is, maybe you could describe that for us.
Yes, there's an income limit to contribute directly to a Roth IRA. And the Roth IRA is really appealing because it involves my favorite words, which is tax-free. When an investor qualifies for the Roth IRA, all the growth in that account is tax-free, and that is just about as good as it gets for a CPA. And so some individuals don't qualify because their income is too high. And when that's the case, tax law has a little quirk that allows to go around and fund and make a non-deductible contribution to a traditional IRA and then convert the traditional IRA into the Roth. And that's a roundabout way to get there, to get that money into the Roth IRA. And so it's called the backdoor Roth IRA.
And then in terms of the Solo 401k relative to SEP, IRA, and to other retirement accounts, the amount that you can contribute is somewhat significant.
Yes, if you're under 50 years old, you get to contribute up to 66,000 for 2023, and if you're 50 and above, it's up to 73,500 for this year. And so, pretty quickly, you can have a pretty substantial balance in that solo 401k.
Right. And that's far better than you mentioned the SEP IRA, where there are limits in terms of how much someone can contribute based on their income.
Yeah, the main difference between the contributions you can make to your SEP and a solo 401k has to do with the fact that the solo 401k allows employee contributions, and those are not dependent on any particular amount of profits for the business. You need to have enough income in the business to be at least equal to the contribution. But the math involved in how you calculate the contribution for the SEP and the solo 401k is different, because the solo 401k gives you that right out of the gate, that employee contribution. Then you get to make an additional employee contribution. And for most self-employed individuals, those who qualify for the solo 401k, and it's important to note you cannot have any employees, then the math works better to get you to larger contributions quicker.
So there's that old saying that says no job is finished until the paperwork is done, and that's true with solo 401ks. There's some paperwork that might be required for some.
Deceivingly so. They're easy to set up, and a lot of investment firms make it really easy. You need to have a plan document because it is a 401k, and so a plan document is required. But a lot of investment firms provide a template, and you just have a few options to note, and within a few minutes, that paperwork to set up the account is done. The deceiving part comes in because the IRS has a requirement that Form 5500 Easy be filed when the account has a balance of $250,000 or the last year of the plan if the plan is closed. And it's often the case because solo 401ks applies to companies that don't have employees. It applies to a lot of gig workers, consultants, people who just have a business for a few years, but not necessarily like an insurance company for hundreds of years. And so when those plans gets closed, the form also need to be filed, and the consequences for not filing that form are really severe.
Now, there's another form called the Form 5500 EZ. Is that something that folks need to know about too?
Yeah, the Form 5500 Easy is the form that needs to be filed, and the penalties for not filing that form are $250 per day, up to $150,000 per missed form. So the consequences are tremendous. Imagine someone who didn't know about this form, hasn't filed it for several years. They would face potentially hundreds of thousands of dollars in penalty. And so that's a scary problem. The IRS, however, has a program, a penalty relief program, where essentially they'll make a deal with you. And in my mind, I can't help but compare it to a jewelry sale. You sometimes see jewelry on sale for 75% off. The price is set really high to make the 75% off more palatable. And I have a feeling the IRS is doing a little bit of that. They hit you with the tremendously insane penalty, but then say, well, but by the way, there's that other program. Then if you come to us, if you don't make us come to you, you get to pay instead $500 per missed form filed, a lot better than $150,000. So you get to make good with us and pay a much lower fee. Still a bit of a sting, $500 per missed year. They limit it to $1,500, but by comparison, I would call it a bargain.
Jean-Luc, in cases where you're bringing your tax return to a CPA to have them do this, is it possible that they'll not catch the fact that you're required to file this form 5500?
Yes, unfortunately, it's very often missed. Tax preparers don't generally ask about the balance in the solo 401k. They don't necessarily ask if a solo 401k was closed that particular year. And a lot of them don't file the form at all. Some of them have told me that their tax prep software does not include the form. And so very often it's completely off the radar for tax preparers. And so the solo 401k holder, if they don't know about the form, there really isn't anyone stepping up to tell them about it. The investment firm don't send a notice to say, oh, by the way, your account has reached $250,000. There's this form. And the tax preparers don't bring it up necessarily either. And so it's unfortunately missed very often, and better to find in advance than wait for that notice that there's a large penalty due.
One last question. Obviously, if you're an employee with a 401k and you're working past RMD age, you don't have to take RMDs from that 401k. But if you own a solo 401k, you would be subject to RMDs after you reach the whether it's 72 or 73 or whatever the required begin date might be for you. Is that correct?
Generally, yes, and there's a generally in there because the solo 401k has a really wonderful feature that's rarely available to template 401k plans, but that is the Roth portion of the solo 401k. So a solo 401k can have a traditional portion. You get a tax deduction for the contribution, but you can also set up a Roth portion to the solo 401k, and there is no RMD requirement for the Roth 401k. So you could have, as in my case, personally, I have a solo 401k which has a traditional side and a Roth side. I will take the RMD on the traditional side upon reaching I think it'll be 75, age 75 for me. But I will not have to take that RMD on the Roth portion.
Jean-Luc, we covered a lot of ground. Anything we missed or anything that just bears reemphasizing?
No, I think you covered it all, Bob. Thank
All
you.
right, Jean-Luc, as always, I want to thank you for sharing your knowledge and wisdom with us. It's so greatly appreciated. Thank you.
Thank you.